Hey traders, it's Josh Bellinger with OptionSizzle.com, and I want to do a quick video and explain to you why following upgrades, downgrades, and what the bigger brokerage firms pump out to the public is useless information and misleading. Cree is a perfect example. Cree Incorporated, and today is January 19th, 2011, and earnings for Cree were just after the bell here, and what happened midday is that we saw Piper Jaffray come out with an upgrade on shares. Well, the things I want to point out to you is if you take a notice at the last few days, so Friday and Thursday's action here, we've been very weak going into earnings. We were able to hold a 200-day moving average, but today we were closing below it, and that's a big a big indicator for a lot of hedge funds that a break below a 200-day moving average that a lot of them will look to liquidate. So midday, when prices were very weak, Piper Jaffray came out with an upgrade. Now, I would ask you, why would they come out with an upgrade? Would they have some kind of information that was inside information that they were acting on and they're going to tell the public about this? No, they're not going to do that. Did they have a feeling that earnings were going to be positive? No. What they're looking to do, and it's usually the opposite of what they post or what they say they're going, or what they initiate, is that they're looking to sell a large block of shares or a big order. And the only way they can do that is to build some kind of hype around it, and they can dump the shares. If you notice how much volume traded today going into earnings, about 8.7 million, and prices closed near the lows. Well, what does that tell you? Well, it tells you that the upgrade was just kind of a fraud. It was manipulation. They're dumping shares on the open market, trying to fool the retail public to buy those shares because they think, oh, it's ahead of earnings. I'll buy the shares and it's going to be positive. No, it doesn't work that way. It's actually the other way around, and this is how the market works. There's a lot of information out there. These firms are out there to take your money, and that's how they make money. And they pump out information that is misleading in cases like this, and you really have to understand what's real and what's fake, and this is what's fake. The thing that you should get out of this video is not to follow what they're doing on a sense of exactly what they pump out to the general public, because it's all nonsense, it's all manipulation, and it's fraud. It should be illegal, but the game is the game, and that's how it's played, and you just have to understand how it's played, and this is one way it's played. So prices were weak, closing near the lows today, and looking at after hours. Bring up a chart of Cree here. We can see prices are at 53 bucks. So we have a really just about over a $10 move in prices, and that's how bad earnings were. Now, again, did they know earnings were going to be this week? Probably, and that's why they had a big order that they needed to get out of, because they had a client, a large fund, or an institution that wanted to get out of shares, and the only way they could do that is to put an upgrade on shares. So this is how the game is played. One thing I also want to point out is that you need to really follow what the charts are telling you, and you notice of how weak it's been, the weak price action. I bet you that they were selling into this move here, and this is why there's a large distribution the last 3 days here. What I do in my chat room is I go over unusual option activity to kind of give an indication. To me, it's a real time and as real time indication as it's going to get. And the reason that is because it shows you where money's going. And this is what I posted in my chat room at 10:49, and I said that the February 60 puts were seeing a buyer that came in 1,100 times at 2,032 cents ahead of earnings tonight. Well, this is interesting to me because at that time, the accumulation in the Feb 60 call, or the 60 puts, were exceeding the current open interest, and I can tell that they were being bought. And with them going out to February, it shows me that they were expecting some kind of move lower, and this is what a few members were able to act upon. And taking a look, I just showed you the chart after hours. A few of them were very happy with what the earnings report was, and the point is that following what is being pumped out in the public is misleading, and following other clues such as option activity and what the charts are telling you is going to be much more beneficial and being able to be a more profitable trader and to have better trades at the end of the day. That's it for the video here. Please leave your feedback below and any kind of comments that you have, and I will be posting more videos in the future. Thank you for checking it out, and take care.